Hello and welcome to today's recap. It is Wednesday night, November 18th, about a week before Thanksgiving. My name is Pete Renzulli from Trading Education Blogs. Thanks so much for joining us today. And today we're going to discuss Fed minutes came out, some earnings came out, some good news on Apple today, some interesting trades both on the long and the short side today. If you want to get a little bit more of a rundown, or if you want to just catch up on this stuff of which stocks to actually put in your list, we have a huge list every single day. You can just go to tradingeducationblogs.com, click on blogs, or click on the homepage, and you get quite a bit of information here, but it's mostly tradable information. It's not really more of a news service type thing. It's really like, here's a giant list of stocks that we filtered. Choose which ones match your volatility and your liquidity, and always be able to find something good to do. But at the end of the day, we basically review the stocks that were in that list. But I want to start out with this here, what we actually wrote about this morning. We've had a lot of traders in the coaching program basically antsy or complaining that they've had to be patient during the day. And I guess they still want the market they have these visions of 1999 where the market just was going straight up or straight down every day and there was always something to do. That we're not in that market. But I will tell you this, to succeed as a trader, whether it's a screaming bull or bear market, you still need patience. And there's two sides you need patience to. Number one is you need patience to wait for good trades. Number two, you need patience to hold your good trades. Now, that second part is an interesting one because most people actually associate that holding good trades where the stock is like moving in your favor very quickly and you just get out too soon. But I want to show you something in the SPY today that I think is pretty relevant. We're just going to focus first on the intraday 10-minute chart. Then we're going to push it out to see what it'll actually look like on the 2-day chart. So don't look over here. So essentially what's going on here is we were trading above the previous day's close, which was here. So immediately right out of the gate, we had some bullish sentiment to the market. So coming into the day, you had to have some sense of, am I bullish? Am I bearish? Or do I have nothing from yesterday? And I will flat be honest with you. As you're going to see in a second, I didn't have a strong conviction today because of yesterday's price action. Yesterday we had a doji type candle. You could make a case for it being a shooting star. We closed lower. We basically closed for flat on the day, and we closed below the 20-period moving average, but we were still clearly in an uptrend. Okay, so I was neutral coming into today with a long-term bias. But I had a very specific picture for what I wanted to see today was, where are we trading from the previous day's close? Where are we trading from the 20-period moving average? And where are we trading from today's opening price? And then where are we trading from yesterday's high and yesterday's low? All of those distinctions are going to immediately go into setting a framework for you to say, I want to be bullish, I want to be bearish, and then make the distinction of whether or not that's in the sync with the longer term stuff, or is it in sync with the shorter term stuff where you don't have as much price action behind your idea. Excuse me. The more conviction you will have should be dictated by how much price action and money was committed to your idea. So in other words, are you trading with 5 weeks worth of price action to want to be long today, or are you trading with the last 3 out of 4 days of selling, anticipating another run at the 202 level? So in this case here, I was kind of neutral, but we had two different scenarios laid out. If I was trading below the opening price today, I wouldn't have as much conviction because I'm only trading with this price action. If we trade above and we are above the opening price and we are positive on the day and we get outside yesterday's range, the expectation for follow through increases dramatically. We had this gap fill over here, and then we also had this resistance level up here, which we kind of got to today. So that being said, I want to pull in our guest of honor, which is the previous day's price action. So essentially, this is all leading up to holding stocks and being patient. Okay, here's the previous day's high. Now you can make a case for it being up here, but we really in our live trading room, we kind of discount the wicks, even though yes, price definitely traded there. We want to see what's the real level price had a hard time getting through, and essentially this is the level here: 206.75, 206.80 in that area. So let's zoom back out. So we know now that this area here is the high of the day. So remember what I just said before about coming into the day with significant reference points, learning to read the tape, having those points, and then as the day unfolds, you need to be saying to yourself, has my idea changed? Now, a lot of traders get into this mess where the stock or the market doesn't move fast enough in the direction, but it's also not moving against them. Nothing is invalidating their idea. So let's think about what I just said. I didn't have a lot of conviction based on yesterday's price action, but we have 5 weeks of price action here and 3 days worth of selling. So I also said we have reference points of the previous close, today's open, where we are from the opening price, and yesterday's high, which is right around this area. So let's think about what's going on here. We open up, we stay above the opening price, we make a pullback. Now, at this point, we know the previous day is up here, so we're still inside of yesterday, but we're still clearly positive from the from previous close and still clearly positive from today's open. So we have some new buying, and today's order flow is holding it above the open. If you're long, there's no reason to bail on your long there. You're still in a position where intraday buying is now in sync with this. None of those short-term criteria to the short side were in play at this point. So now you got to keep reevaluating. Do I want to be long? Has the idea changed? Do I want to be long? The answer is yes. Has the idea changed? No. Now you got to be saying to yourself, what would change my perspective to either increase or decrease my conviction level on my trades? So obviously we went over that. If we couldn't get above this level, that means we failed at the previous day's high. And if we get below the low, we would switch over and take a look at some stocks that actually might have some selling pressure, because at that point the market would be coming in. But we didn't do that. We know this is the high from yesterday, this area here. So now we get up, push through, and now we flag at the previous day's high for basically lunchtime or 2 hours. But let's dig deeper into what's actually going on there. And I'm going to zoom this out again. Okay, we have now stayed above the open, stayed positive, and now we push through and we're consolidating above the previous day's high, which is a major reference point. The previous day's high and the previous day's low should always be the reference point you look at as your first line of reading the tape coming into the morning, and especially as the day starts to unfold. So now at this point, we go sideways for 2 hours, and I can hear all the traders say, oh gosh, why isn't it moving faster? Why didn't it go up and explode and just give me easy money? We're not in that tape. There's so much indecision. Are we getting interest rates? We're not getting interest rates. We had the Fed decision minutes come out in the afternoon, and obviously that's what spurred this. But my point is, regardless of this happening, okay, this price action going sideways is still telling you your concept for wanting to be long based on this, based on holding here above the open and now holding here above the previous day's high. Those are all still in the context of the long is still valid. So please pull yourself out of the thought that I'm day trading, it needs to move quickly, and into the framework of, is my idea still valid? Do I have a reason to pull the plug on this trade, or is it just a matter of me being patient to continue to have that thought process? And today, and quite a few trades today, patience into the afternoon, regardless of the reason why. If you came into the day wanting to be long a stock, you might have had to take a loss. You might have had to re-enter the trade. You might have had to work the trade a little bit. But if the stock was long and strong coming into the day, and I'll use ATVI as my example of a stock that I had on the blog post today. Okay, so you can see why we were looking at it. We had a pretty clean resistance level. Here is yesterday's close, from 36.50 to about 37.25, maybe just below 37.50. So $1.25, average true range about $1.64. So we had a clean move with a very clean reference point. So now here's where you get a little frustrated. The market actually, at that point now, is still above here, above the open, but you come into the day with your concept of wanting to be long the stock. So now you got to make a decision. If the market is here and now starts to trade above the previous day's high, do you bid any of these trades below the previous day, below the previous day's high? And let me zoom that out a little bit, which actually kind of like right there, right? So this is still within yesterday. Or do you wait for it to get above today's opening price and ultimately start to look for a spot to bid? Now, that answer on whether or not you bid down here has to do with your conviction with this, and it has to do with your conviction or your interpretation of the market. So the point that I want to make is, if you were patient, okay, if you were patient and you were paying attention to some stocks that were relatively strong, above the 20-period moving average, closing and trading above the opening price, hour by hour, you're getting some sort of buying pressure that's not giving you any signs of the market reversing. You have to have the guts, and it is, in the beginning, it is guts, but you have to have the guts to hold those trades because your concept is still valid. I cannot stress that enough. You can't bore yourself out of a good position, and you certainly can't book quicker profits because the stock has slowed down. You need some sort of metrics, whether it's a moving average crossover on an intraday candle, intraday chart, even though this is a daily, pretend that's a 10-minute chart. If it's a moving average crossover, if it's breaking the previous candle, whatever it happens to be, you need to know that before the trade. And if that scenario does not happen, you need to stick with your trade because you need the bigger wins when the market follows through to offset all those expected small losses that you accept in exchange for taking risk. So it's kind of why we have this as the cover here. Green, obviously, because the market was positive, but all kidding aside, patience is the first to wait for good trades to set up. And actually, I had a really good call today with somebody today, and we really made some awesome breakthroughs in the coaching. And it was really about patience leads to good trades. If you have a good strategy and wait for those trades. But really, the bottom line is good trades are made before you even take them. Okay, and I want to basically make what I mean by that very clear. If a trade makes money or if a trade loses money, that doesn't necessarily make it a good trade because you could put on the crappiest trade in the world where, say, a stock's going straight up and you guess a top and you're right. That doesn't make it a good trade. It makes it a lucky trade. Good trades are ones that match your strategy and you follow your strategy. So the patience of waiting for good trades is really what we want to drill home today. So this is the map of the S&P 500 as of yesterday's close and coming into today. So you can kind of see why I was neutral on the day. There was nothing screaming that said this whole sector or this industry, maybe a little bit of these guys over here, the discount box stores. Facebook's been relatively strong as well. But my point was, as an overall S&P 500, we basically closed flat on the day. We closed near the lower part of the range. Nothing to be excited about. So now you had to make that decision. Are we trading with the last 5 weeks? Or are we trading with just this price action? So I came into the day with the terminology of no edge in the market, and you can see that here, stuck in the middle of the last 5 weeks. And actually, I'm going to pull that up as well, just to give everybody what I mean by that and how I pulled that out. If you actually take a look from here to here and look within this window, you can see that as of this morning, we were kind of in the middle. So there wasn't a giant edge to being long because you were halfway between the top and halfway to the bottom. And now you were basically in day trading mode. And that's essentially what I mean by that, day trading mode. So day trading mode, interesting to note now, we're 4 days into the gap lower without filling it. Today, we actually did fill that. Also coming into the day, and I'm sure you guys run as many scans as I do, you come in and you look and you're like, oh, wow, I had 52 stocks set up on my short sale scan and I had 25 on the long. That tells you something. You kind of dig into the underneath the hood, and you're like, all right, so there's a lot more stocks. The advanced decline coming in was a little bit weaker. Casino stocks we're going to talk about in a second as well. And basically the question was, would these two guys who are the leaders there, at least for day trading and good liquidity, would they hold that bid or would they sell off? And again, I said about 4 times already, very, very little edge in the SPY there. So take a quick look at those casino stocks and get a picture of what I'm looking at. This actually was a pretty good head and shoulders bottom here up until this point that just didn't follow through. And now we're actually kind of hovering over here. And we had a lot of people asking if there was sell shorts. And I kind of had them on the sell short list because you have to love the room to go here. And you can see here Wynn actually dabbled above the opening price. But what's interesting here and why this follow through should not have shocked you. Now, there was bad news yesterday afternoon at the close about declining revenues. I think it was, as a matter of fact, it was half of what they normally would do this year, this time last year. The fact that the SPY was above the open and holding above the previous day's high at this point, and Wynn was actually below the opening price. If you were looking for something to sell short, this met the criteria of relative weakness to the SPY and also relative weakness to what the SPY was doing today. So you can see this actually sold off intraday. It actually picked back up, and LVS was not as weak. But this is kind of what's making the market exciting to trade because you really got to be on top of your game. LVS broke down, didn't hold down. It was relatively weak and just caught a bid with the rest of the tape. So, again, something else I talked about in the coaching today. If this happens and you put on a good trade that doesn't follow through, stop complaining that you're the only person in the world that the trades aren't working out for. It's a part of trading. If you want to learn how to become a great trader and you want to get to the other side of trading, and again, let's put great trading in context. If you want to be a consistent trader who belongs in the market, if you want to be a consistent trader who gets to the point where they put themselves in a position where they can make big money in the market. And again, big money is relative to everybody. You might be trading 100 shares. You might be trading 1,000 shares. It doesn't matter. If you're trading 100 shares and you can take home $300 a day, that's pretty darn good. So put that in perspective. But what I want to get across to you is when you put a position on, and if it's the right trade and if it works out, great. If it doesn't work out, that's great too, because you're just running your trading business. Your capital is your inventory. You have to take risk to put on a position. If you do the right thing, everything lines up. You put the trade on it, it doesn't work out. That is perfectly okay. It's just a part of doing business. And the more you really believe that, the easier it's going to be for you to take losses, because you'll understand they're nothing more than one of a bunch of trades you're going to make. So if we take a look at a couple of more stocks, we'll take a look at a couple on the short side. Qualcomm, if you've been following the video, this is not a coincidence that we're actually watching this one today. If you know anything about the way we trade, one of the biggest things on the blog every morning is inside candlestick patterns that we represent a consolidation leading to a breakout. And you can see here at Qualcomm, let me just draw this out a little bit better. For about 3 to 5 days, forming this nice tight little pennant, nice little consolidation, and we were calling for a breakout, and we kept saying whichever way it breaks out, we're not going. And even though it was in a big gap down here, the more days in a row it consolidates, you don't want to call direction. You only want to call an expansion in volatility. So contraction leads to trend, and you'll see that this happens quite a bit. It's a really solid pattern, and today was a great day to get paid on that in Qualcomm. And a little, again, get paid meaning it was a good trade. I'm not saying anybody made or lost money. And VMW is very similar. You can see it's been consolidating for almost 3 or 4 weeks right now. We keep going back to it every single day. It hasn't really broke out. Today it showed, again, the SPY was up here above the open. Good relative weakness for the entire day. And if you wanted a stock to short, and you can see this actually collapsed when the market was going sideways, really good relative weakness there as well. Look for some follow through there tomorrow. Target actually broke down today. And what was the other one that we had? I think it was VRX, if I'm not mistaken. No, it wasn't. I'll come back to that. But on the long side today, this WTW is just absolutely fascinating. I understand Oprah got involved, but I understand maybe the first move from here to here, but the fact that it keeps getting buying and the volume keeps coming in, and average to range is around $1.90 right now. That's got it. God, give it props. That's pretty impressive right now. So Baidu as well. We got some buying in Baidu today, stayed above the open the entire day. We were actually been watching this and saying 200 the level, and this is actually, we're going to show a different stock where you don't want to get caught up in these wicks. You want to, anytime you get these wicks, don't use this as the real price. This is the real price it's got to get through, because you look at the chart and you're like, what's the real price it's having a hard time getting above? And you look here, tested 200 once. Tested it twice, couldn't stay above it. Tested it again, got above it, couldn't stay there. Got above it, couldn't stay there. Got above it, couldn't stay there. 200 is the real number there. Don't be a rookie trader, a rookie chart reader, say all the way up there is the level. Down here is the level at 200, and you can participate in this much sooner than getting involved late there. So that's the recap for today. Actually, you know what? Let's touch on Netflix to end the day. What a run in this stock. We actually had it as a neutral today, especially on a push higher. And you can kind of see here early in the day, it actually stayed below the open, but wow, is this impressive. 102 to let's see what's the high here. 1 to 121. $19 in 3 days. Average true range is $5, so it's actually well extended from what it does on an average day. We also talk quite a bit about having a certain group of stocks in your list every day that you would call them beautiful day trading stocks, aside from just the stocks that you run your scans on. Apple fits in that category. Netflix fits in that category. Goldman Sachs. Stocks that have good volatility, which is an average to range of a minimum of $1.50 in my book, and also good liquidity, which shows institutional participation, which in my book is over over 2 million shares. So 2 million shares to me shows good active participation from institutions on a daily basis. $1.50 average true range gives me enough volatility or price action intraday on a regular basis. And then you could take that even a step further, and you want to start to look at the daily charts, and you want to pay attention to see whether or not there's a lot of wicks, doji type candlesticks, or whether or not you're getting follow through. Now, Netflix probably not the greatest example here, but actually, you know what? It is a good example. You know why? Because we drew this box here, and it's very clear that it's within this box. But now, all of a sudden, volume and activity from bigger green candles start to pick up to push it through. So that's actually a good example there. When it's trading well, you'll see a lot more of this. And when there's room to go, when I say this, I'm talking about big green or big red candles. But you can see clearly here going back to mid-August, it's been trading between 97 and 114, and that's why you're seeing what they're technically called doji candles, but I like to call them indecision. Keep things simple. Don't work your butt off too hard. Keep it what it is. It's indecision because it opened and closed in relatively the same spot. And actually, you know what? I just remembered one other thing. This morning, I'm going to actually zoom this out just a little bit. We actually had a trade this morning. I want to discuss Fibonacci levels really quickly. And in Target this morning, if you look at the high, which was 72, and the low was 69 area, give or take in this area here, we just use 69 as two round numbers. $3, okay, $3 from high to low here in the first 10 minutes. You can see it's a 10-minute candle. And as we were bouncing, let me actually put this on a 5-minute chart. You can see it a little bit more dramatically. Okay. So we basically said from here to here is $3, and we used a 50% retracement level. So half of $3, which is a Fibonacci level. I'm saying the easiest way to Fibonacci levels, keep it simple. Say, what's a 50% retracement? If it stays above that level or below that level, if it's a down move, the stock is still good to trade in that direction. So in this case here, from the high to the low was $3, and as we started to bounce, we said half of $3 is $1.50. So you add $1.50 to the low, which we added $1.50 to 69. I think here, or six. Basically, we use 69 just to keep the number simple for everybody, even though it was about 10 cents, 12 cents below that. So $1.50 from the low is 70.50, and look where we went to the penny. So don't make Fibonacci's too complicated. Make them as simple as possible. Pick a high, pick a low, say what's that divided by 2 to get a 50% number, and that's the area you would look for the next move in the opposite direction. So this push down here was actually really a really cool move to watch in real time with everybody in the room. It's kind of great to see when somebody understands they don't have to make it as difficult as we make it sometimes, and just something like that, a 50% retracement on the Fibonacci. Keep it simple. Don't go crazy. You don't need all the fancy software. We just, it's $3 divided by 2. And that's it. Okay, $1.50. Let's look for it in that area. So hope everybody gets to the website every morning and reads all the blog posts of all the great stuff. We have good trading news every morning, a huge list of stocks, and obviously the recap. If you haven't joined us for a trial in the live trading room, highly recommended. $15 for 30 days, worth every single penny of it. If it's not, I'll buy you the coffee myself. Pete Renzulli, Trading Education Blogs. It is November 18th. Signing off. Have an awesome night. See you tomorrow.